Morning, everyone. Welcome to our Apartment Insurance Quoting Made Simple webinar. My name is Anae Augustini. I'm CEO of CID Insurance Programs. I want to introduce Michelle Belden, who's our commercial underwriter and specialist in apartment insurance.
Good morning, everyone.
And then I'd like to introduce Jacob Cole, our marketing specialist, who does everything behind the scenes to make sure the webinar goes well and you get everything you need afterwards. Say hi, Jacob.
Hello, everyone.
Okay, so today Michelle's going to be educating you on apartment insurance and how to make it quoting simple. Let's talk about our logistics. It's really easy. Most of you will probably know. All participants will be defaulted to mute, and that's because there's so many of you that we can't have everybody talking at once. So you'll be able to hear, but not to speak. But your voice is really important to us, so we'd really like it if you'd use the chat room to ask questions or make comments throughout the webinar at any time, and we'll stop and answer those questions for you. So questions are important. Feel free to ask those questions in the chat room. And then at the end, there'll be a little survey, and we would really appreciate your feedback. We count on you giving us feedback on how we're doing, what you'd like to see us do better, what you like about it, and want more of, et cetera, et cetera. So let's talk about what we're going to cover today. Webinar objectives. Well, let's talk. We're going to get a little more. You can get a little more familiar with the different types of apartment buildings, residential buildings, and how to recognize what you have. We're also learning more about how to underwrite an apartment building risk. There's a lot that goes into it, so to get it right and to get competitive quotes. So Michelle's going to cover that for you as well. And then, what are the property components that you need to be concerned about, make sure that you're insuring for? And last but not least, how to prepare a quotable submission. That's where you get your competitive premiums. So Michelle's going to go over that as well. So I'm going to turn it over to Michelle and let her get started.
All right, thank you, Anae. Okay, everybody. So I just want to start with a basic definition of an apartment, because I know it can get skewed sometimes, because some people think that 4 units is an apartment, when actually by definition an apartment is, at least an insurance definition, is considered to be 5 units or more. That could be multiple buildings that make up a complex that, one building has 2 units, another building has 2, and then a third building has 1. But those 3 buildings make up 5 units, which would make it an apartment. Anything that is 1 to 4 units, and that's the only building that is part of that property, we would consider that to be a 1 to 4 family dwelling. So with the 1 to 4 family dwellings, those can fall into a gray area where it could be either personal lines or commercial lines, since it's not actually considered to be an apartment. So I just wanted to go over that with you guys. And then, so we had market to quote both apartments and 1 to 4 family dwellings, but today we're going to focus mainly on apartment buildings. All right, so like I just said, an apartment building has at least 5 units or more, whether that's 1 building or multiple buildings making up that complex. And then another type of apartment building that you'll see is what I call a mixed-use building, that being, on the top 2 floors, there's residential apartment units. And then on the bottom floor, there's some commercial units for maybe like a little coffee shop or a printer or some sort of retail store. So that's what I consider to be a mixed-use building. So we can definitely quote those. It's something I'll talk a little bit down the line on, like what we would need as far as rating factors go. And then one other thing I wanted to just make a differentiation between apartments and community associations. Your community associations are made up of multiple unit owners. So, they could be single family homes that make up a residential PUD or a condo association, but those are all made up of multiple unit owners within that association, as an apartment is generally just one owner of the entire complex. All right. So some things to consider while, if you get an apartment submission, what things I'm considering when I get it and things you should be looking for when you're trying to work up the applications to send it over for a submission. So we're looking for, well-maintained buildings, regardless of the age. We definitely can quote the older buildings. I think I've quoted things as early as the late 1890s, to present day. So there's just going to be different guidelines that come along depending on, the age of the building and what updates they've had and things like that. So updates is an important thing to, be looking at. We're looking for, building updates for these buildings in order to offer you guys the best coverage for them that we can. So with that being said, we're looking for full updates to the heating, the plumbing, the wiring, and the roof within the last 25 to 35 years. This can vary by carrier, what their requirements are for those updates. If it's a brand new building, well then, that'll be a super easy thing to quote because we don't have to be concerned about the updates because we know that it's up to code based on the current standards. Another thing you would want to be considering is what is their annual rents. We need that information in order to offer them business income. That is an important coverage for them to have, which we'll talk a little bit more about in the presentation when I get to the property coverages we would want to discuss. Vacancies, that's another thing to consider. How many units do they have vacant in the apartment? Is it 100% occupied? Most carriers are looking, it depends again by market, but is looking for at least 70 to 75% occupancy for your apartments. And then are your apartments, are they being managed by the building owner, or do they have a third-party management company assisting them in their managing of their property? All right. And then some other things to consider are, how tall is the building? Is it sprinklered? Most carriers, once you get over, some are 5 and then some are 7. But once you get over there, is the building sprinklered or not? That will be a definite thing. And it's important to know if those buildings are sprinklered because there is a credit that is available with some of our carriers in order to offer a credit for having the building being sprinklered.
Michelle?
Yes.
I just wanted to stop you for a minute. We have a question that came in, reference to the last slide.
Okay.
They're asking what documentation is required for building system upgrades.
My markets, at least at this point, we're not to the point where they're actually asking for any form or any certificates or permits showing that the upgrades have been done. They are just looking for the years. I know there are some markets out there that do require these things, and it could become a case-by-case situation with the carrier where they do require permits or some sort of documentation. But at this point, I'm just looking for the years that the updates occurred.
Perfect.
Okay. So some other things to consider as well. Like I said, we're looking for well-maintained buildings, and it's not just the buildings. Want to make sure that the parking lot and the sidewalks, that there's no potholes or cracks and anything like that, so you aren't or preventing any sort of trip and fall. We're trying to limit, the potential for claims here. So those are things to be looking out for. Inspecting and the stairways.
And one of the things, Michelle, is that anytime someone changes carriers, there's always going to be a loss control inspection, correct? And you're talking about things that are sort of the hot buttons that get caught on a loss control inspection. So these are things to look at in advance so that you know what may be coming if you make the change.
Correct. Because some of these, some of these loss control items that we find, like these things are, you forewarn the insured and let them know, you might need to set some money aside to make some repairs and things like that. Because some things that are found can be costly. All of our apartment risks do get inspected, regardless of what carrier I place them with. This is just a common class code to have inspected. So these are just like tips and tools we want you guys to be aware of, to let the insureds know, and for you to see if you go visit the property yourself, just so you can make note of, once the carrier does their inspection and comes back with a loss control, then we would go there about how things would be in order to complete the loss control and meet the requirements of the carrier. So like Anae was saying, these are the hot things that we see most often and just want to bring to your attention. So stairways and any sort of railings, we are looking for the spacing in between them to be no more than 4 inches. I know some carriers will go up to 6, but I'm seeing a lot of tightening up on this. So 4 inches or less in your spacing is great. If there is any horizontal ratings, those are becoming really tough to write. Most markets don't like horizontal railings because it basically acts like a step ladder, and you can just crawl up it, picture a little toddler trying to crawl up it and then getting to the top and then going to the other side. So we're looking for non-horizontal railings. They may be aesthetically pleasing to people and the contractors building them, but unfortunately in insurance, they're just not good. And then if there is a pool on the premises, we're looking for the pool to be fully fenced with a self-latching gate. I've gotten in the past requests where there is a pool on the premise, but the pool is empty and they're not using the pool any longer. So I can consider those with some of our E&S non-admitted markets. However, we do require that the pool is fully covered, either with a tarp or some sort of it's boarded over, and then as well it has to be fenced and locked. But I have run into those before, and I have been able to assist previous clients with those ones as well. And then we're looking to make sure that there are fire extinguishers. I'd have to say having fire extinguishers, at the buildings and the required places properly mounted and tagged is the biggest loss control item that I see across the board. So that is an important thing to have as well. Okay, so how to properly insure an apartment. So we need to accurately determine how many buildings there are. One building, great. If there's multiple buildings, we have to determine if it is truly multiple buildings, as in, there's 2, 3, 4 buildings, or is it one building, but it looks like it's multiple buildings because it's connected by a common roof. So I have some pictures in the coming slides that we can go in a little bit more depth to see what I'm talking about here. So once we determine how many buildings are, then, we need to determine what other components are attached to the building that would need to be included in your building limit. So say there's a fence on the property. If it's touching the building, it is part of the building and it's part of the structure. So we would include that fence as part of the building coverage. Or they have an attached garage, things like that. So would be what we can, and then we want to look at any components that are not attached to the building that would also need coverage. So again, if there was any unattached carports or garages, a laundry room, those would need to be its own coverage because we need to provide coverage for those structures as well. They may not be living structures, but they still need a coverage, a building limit and property coverage for them as well. Okay, so the picture on the left clearly shows a complex that has multiple buildings. You can see there's spacing in between the buildings, so you can see that there's in this picture there's 1, 2, 3, 4, 7 buildings. So you easily can see that, and then you can also see that there's some carports, the little white roofs. So those would be other structures that we'd be looking to wanting to make sure that coverage is being provided for as well. Then if we go to the picture on the right, it looks like it could be 3 buildings. However, if you look, you can see that the whole building, if you go across, the roof is connecting all 3 of those, what almost looks like separate structures, as one. So that would actually be considered one building. And then again, we have some other examples. The top left picture again shows that there's multiple buildings, and you can see that we would need to be insuring each of those buildings individually. And then the building in the top right corner, it's got some a little extra design things attached to the building as well. So, we would want to be incorporating in our cost for the building any components like that because it is touching the building. And then the bottom left corner shows how the fence is touching the building as well. So that would be considered part of the building. So that's something that would be included in your in the building limit. And then again, the bottom right picture again shows how even though there's clearly a space between those two buildings. They are connected by a common walkway, which is part of the roof. So it would actually make this would be considered one building. Okay, so I've been talking a lot about building limits and things like that. So we want to talk about how to, properly come up with your property valuation and how I would be looking for this to be broken down in order to, offer you guys a quote. So a statement of values, also known as an SOV, is really important for multi-building complexes because we can't offer blanket limits. And if I can offer you blanket limits, I still need this information in order to be our backup to show how we got to that blanket limit. So it provides a breakdown of the buildings and their components that we're looking to cover. So, it's like some people are kind of, I think, afraid of statement of values because they don't really know what it is. It's really nothing to be afraid of. It's a really simple tool, and it's helpful for you as well, when you're going and looking at the buildings and things like that. So, for me, I'm looking to make it as simple as possible for you guys. So I'm only looking for 3 key pieces of information on a statement of values. I just need it broken down. I have an example on the next slide, so I'll show you guys that in a second. But I'm really just looking for the buildings to be broken down by the number of units, the square footage, and then their property valuation or the property limit for that building. It's really simple. I'm not looking for anything extravagant or any sort of like obscure details or anything like that. We just want it because this, in order to quote it, I have to make sure I'm keying all the buildings that are at the location. And we want to make sure that we're properly insuring each building and not underinsuring anyone or overinsuring any one building. So I'll show you guys an example. A lot of people say they don't have one. This is a template that I send people. It's just an Excel spreadsheet, and it's, totally customizable to add things and delete columns on there. So again, it's just showing you there's location 1, building 1. You would put in, let's just say there's 4 units in the first building. The square foot is 2,000 square feet, and then you would your cost per square footage times your square footage gives you your building value. So that's all I'm looking. If there are other structures, like I was saying, anything unattached from the buildings, in the bottom half of that is where I'd be looking for that information to be. Some of these things aren't going to have a square footage or total count and things like that. You can just put in a value for that. We just want to make sure we're encompassing all of the components that they're looking to have covered. So that's all this is. It's just a tool to make sure when I'm quoting a risk that I'm getting everything that they need coverage for. So this is really it. Like I said, try to keep it as simple as possible for you guys and for myself. Okay, so determining the property limit, that can be, like where do you start? Obviously, you need to know the location where the risk is. The construction type plays into that. Is it frame? Is it masonry non-combustible, etc.? The building height, that will be a factor as well. Is it 1-story, 2-story, or is it a high-rise? Things like that. And then the quality of the building. So these are just things to consider when you're determining your cost per square footage. Typically, I see, this is going to vary by state and by even within the state. It will vary by the city and the county. But typically, I'm seeing anywhere for the cost per square footage, anywhere from $125 to $250. Again, if there's an elevator in the building or, maybe they have some marble flooring in their common area walkway of their apartment or something like that, then yeah, I could see the cost being a little bit higher and things like that. But the typical range I'm seeing is, like I said, $125 to $250. Other ways to, help determine the valuation of the building if you're not sure, or, you can't go, this is a new purchase for the insured and you're just not sure where to start. You can always run a valuation report. A Marshall and Swift is a common one that people use. There's also a service through CoreLogic, and it just gives you a building valuation report, and it helps you determine, it calculates in, where the risk is located, pretty much all the factors I've just discussed, and it gives you a limit. So then from there, we can round up because it's always generally a pretty odd number, and then we can offer the coverage for that. So when I get in any set of a submission for any risk that's looking for property coverage, I always take the building limit and divide it by the total square footage to see where the cost per square footage comes out. Because sometimes it could appear to me to be too low, and then in that case, and you're saying, no, this is correct, you could provide me with the building valuation report you ran, and that would suffice for me, and I'd be like, okay, I understand where you determined your limit from. And then, especially your preferred markets, they themselves too have a building valuation system built into their, rating system. So I could key the limit that you've requested, but then I could get a quote back from them. However, the limit could be higher because it doesn't meet their requirements. So again, if you would be looking to try to lower the limit, if the carrier came up with a higher limit, again, I would ask for some sort of valuation report in order to provide proof to them, like, yes, we are insuring the building at the correct value. Okay. And then, so some coverages to consider when, looking to get a quote for an apartment. Obviously, the property coverage is the most important coverage. So, coverage for the building, and then any, things that are attached to the building or any other unattached components as well. We'd be looking to want to cover those components under the property. Your loss of rent is your business income limit, so I would need that information. Even with our preferred carriers who offer ALS, actual loss sustained, they do require that we still have a limit because we have to key that information into the system. So I will always need a limit, and if I don't see a loss of income limit included on our submission anywhere, I'll always go back to and ask for it because it is an important coverage for them to have. Other coverages, other property coverages to consider. Building ordinance, those are important coverages. So there's building ordinance coverage A, which is the loss of undamaged portion. And if you select that coverage, that limit will be equal to your building limit. And then there is also coverage B, which is the demolition coverage, and coverage C, which is the increased cost of construction. And with those two, you can either have the limits be their own limit, so one limit for coverage B and one limit for coverage C, or you can do a combined limit of B and C. And generally, I see that at 10 or 15% of the building limit, or a set amount. It just depends on what coverages they're looking for and how they want it to be quoted. Equipment breakdown, another important property coverage to have. So again, the building ordinance and equipment breakdown, those are, other property coverages. So if you want them, please include them on your submission to me as well. And then, depending on the carrier, each carrier is going to have their own, property enhancement endorsement that can be included as well. So that will just vary by the carrier in which it can be included. And then obviously, we want to write the liability for them, for those in the event of those trip and fall type claims and things like that. So we can write a GL, package it with the property, or we can write it on a monoline basis. Hired and non-owned auto is also an important coverage to, include under the liability as well. And then we can also consider the fidelity coverage for them, in the event that there's a theft of the funds by their property managers, so they have an on-site manager, or there's a third-party management company involved. So it's a good coverage to consider as well. And then Caesar in my office, he handles all of our workers' comp, and he would be able to assist you with that for an apartment complex. All right. So I did just talk about the types of coverages we can offer. So I just want to go in a little bit more detail about those. So special form replacement cost obviously is what most people are looking for. However, with the older buildings, if they haven't had the updates within the last 25 to 35 years, I might not be able to offer you that. We would only be able to offer basic ACV. But like I said, if you're able to provide the years of the updates, and they've been in with, like I said, within the last 25 to 35 years, then special form replacement cost is definitely what I would be striving to offer you. It could come down to the carrier's decision and them not being comfortable with offering it, but again, we're always looking to be able to offer you guys special form replacement cost. For the general liability, most of my carriers only offer standard 1 million, 2 million limits. They don't do 2-4, which is not a problem. We have excess markets available with limits up to 10 million. So if we can't, meet those requirements that they have, say for because of their loan, or they're looking to have higher coverage because they want to be, more insured, which is a great thing for them, we definitely have those options to write the excess coverage for them as well. And then, depending on the occupancy and where the risk is located, I can consider building limits up to 75 million. But again, that's going to vary by risk. So, if you have something that's over that limit, don't be afraid to submit it over. I'll definitely take a look at it and see, where I could find a home for it if I'm able to. That's what I'm always here to do. I look at each risk and I make sure, I'm taking it to every market that I have available. Every carrier's got their own guidelines, and I don't expect you guys to remember them. That's my job. So, and things are constantly changing. So, I might have told you no on something in the past. Doesn't mean that, that's still the case today. So please, just submit it over and I will take a look at it. And I always want to be upfront with you guys and honest with you guys, because I don't want you to waste your time and get frustrated, filling out a bunch of applications and then me coming back and telling you, oh, sorry, I can't write this one. I'm always willing to consider it. If you're not sure, feel free, pick up the phone, give me a call. I'm always around. If I'm not, I'll give you a call back as soon as I'm back at my desk. But I'm always happy to, discuss any risk with you and help you guys out. And then, like I've said, we can consider the older buildings, as long as they've had the upgrades. If they haven't had the upgrades, I can still consider them, but we would most likely be looking at basic ACV for the coverage. And then, like I said, our package policies are, your property and GL, and then we can add on those other coverages I was discussing, and, maybe some other coverages you guys think of that we haven't discussed. I'm always looking to see what available coverages we can offer to everyone for these submissions. All right. So this is a little risk profile that we had worked up, as a tool for you as agents to use. It's something that, if you're meeting a new client and you just want to be able to get the basic information down, so then you can transfer this information over to your accords and your supplemental for an actual submission, or you can send it over to the insured themselves to have them complete it for you, so then you can do the same thing and transfer the information. It's a quick little tool. It's one page, as you can see, and it just asks some basic questions just to get enough information going in order to put a whole submission together. It's also something
that's available on our website under resources, and I believe it's under templates. Correct, Michelle?
Yes, I believe that is the correct, resources and templates portion on our website. And then, also great for new purchases. I don't believe we've really talked about that yet. I can consider new purchases. I get requests all the time, escrow is going to close in a week or two, and so they need to get the insurance, or at least get a quote so that they can get their escrow going and things like that. So I'm happy to quote new purchases. It's not a problem for me. We'll work with the information that we have, and then when, once they've closed escrow, then we're ready to bind coverage. All right, so how to get a submission and a fast quote for me. So I'm looking for a complete submission, and so for me, a complete submission includes accords, some sort of apartment supplemental. We have one that is available on our website for you to use, or I can quote off another carrier supplemental if you already have one completed. I'm cool with working with both. I'm not going to make you complete another supplemental because I don't want to use somebody else's. That's not how we work. If we can quote off of it, we will always quote off of somebody else's supplementals or applications. However, if there's important information that we need, I may just ask you a couple of questions instead of making you complete a whole application, so that way I can see if I can get you guys a bindable quote. And then loss history. if they have prior coverage and you have a copy of the loss runs, loss history is always great to provide. Generally, I'm looking, it varies by market, but I'm looking for 3 to 5 years history. And if, say they bought the building 2 years ago, then that's fine. That's all the, loss history that they have. That's totally fine. If they have had any losses, I can consider risk with losses. I would just need some further details regarding those losses. So, if you have a submission that has a loss, that's something that we would have to discuss a little bit more in detail, so I could review it and see if it's something that our markets would be willing to consider. So I just have a couple of questions that I generally ask, like what happened for the loss, if there was property damage, like confirming the damage has been repaired, and then if there had been any sort of actions that could be taken in order to try and prevent future losses of a similar instance from occurring. And so, those are the types of questions I'd be asking if there have been prior losses. If there's been no prior losses, well, then good for them, and I hope they stay loss-free. And then if you have a target premium, that's always helpful for me, to make sure I can, tell you right off the bat if it's something that I'd be able to consider, or if I'm saying, I don't think I'll be competitive on that one. So, you're not wasting your time, but, I'm happy to quote what we get. And like I said, I take everything to all of my available markets that a risk qualifies for. So I'm able to offer you guys the best quote that we're able to offer with the markets that we have available. And then, like I said, we make it easy as long as we can use any application that we have and that you have completed already. I'm always going to need the Accords, 125, 126, and 140. But after that, any other supplementals that you have completed or any other applications, feel free to include those with the submission, and I will be happy to, use them. Like I said, if I'm missing any information from you, whether it's on the Accords or on the supplemental, or anything else I need in order to quote the risk, I'll always reach out to you to let you know what additional information is needed in order for me to continue to quote the risk for you. And then I know a lot of people are switching to electronic signatures, using like DocuSign or DigiSign and things like that. We can definitely accept applications that have been signed electronically. That's not a problem for us. All right. Does anybody have any other questions for us?
Great job, Michelle. Very, very informative. I hope that our audience felt the same way. We've got lots of tools. We will be actually sending out an email to all of you with some marketing tools, some probably our submission requirements, and then you'll be asked to do the survey. Michelle's ready for any submissions that you guys want to send in for apartments. And she writes a wide variety of products. So if you've got condos, you've got LROs, your lesser's risk, commercial buildings, send those to her as well. And then if you've got questions, we're very responsive. And so email Michelle or call her directly. For those of you that are doing business with us, we so appreciate your business and look forward to doing more. And for those of you that are new to us or are not actively doing business with us, we encourage you to submit some applications for quotes to see how well we will take care of you. And it will be contagious. You'll want to do more business with us. And so we look forward to doing business with you as well. I don't see that there are any other questions coming through. Right. So again, thank you so much for joining us and have a wonderful day.
Yes, thank you.